Welcome back, everybody. Thanks for tuning in. If this is your first time here, do me a favor, hit that subscribe button, hit that like button, leave me a comment, let me know what topics you want to hear about, because I think it's important that anybody that wants to learn about real estate, whether it be first-time home buyer, investor, multifamily, whatever it is, that you make an effort to learn as much as you can and be as informed as you can. So today's topic, we'll jump right into it, but we're going to talk about the market today and the interest rates that we are seeing, and why is everybody all of a sudden going on complete pause. Let me know in the comments what you think is the reason why. Is it interest rates? Is it inflation? Is it everybody scared of the economy? All the above? None of the above? Let me know in the comment section below. But we're going to go over a handful of things and why I still think it is a good time to purchase a house. Now, yes, interest rates are up from where they were during COVID. We were in the 2s, 3s, some of the lowest we've ever seen in the market ever. So, that also created a complete buying frenzy. And as you saw, especially in certain parts of the country, here in Austin, we saw home prices jump up dramatically. I mean, hundreds of thousands of dollars to the new median price. And in Austin, you're looking at almost $600,000 median home price. Now, has that changed? Yes, to a certain extent. Homes have continued to maintain at a flat, level playing field, and homes are sitting on the market longer, but interest rates are rising. So what does that do for you as a buyer in this type of market? Well, it creates a few key items that I think that you really need to focus on. One is opportunity. You really have an opportunity right now to come in, make an offer either at asking or below, depending on how long it's sitting on the market. Now, homes are sitting for 30 plus days, and it's taking a while for these sellers to get their home under contract, which is a plus to you as the buyer. We have turned from a seller's to a buyer's market. That means that y'all have more control over how you operate, how you purchase a home, how you purchase an investment property. Whatever the case is, you have a lot of options. So, let's talk about interest rates. Interest rates right now are teeter-tottering on either direction. Last week, they dropped below 5. This week, they're a little above 5, and it's going to continue happening. Now, the Fed has said that because of the market, because of the volatility, because of the economy, they can't predict how things are going to swing one way or the other on the pendulum. So, you have two choices. You can wait it out and see what happens, which I wouldn't suggest, because even in Austin, everybody's saying that home prices, yes, have stalled, but they're still expecting to see a 5% increase year over year. So that means that home prices are still going to go up, and your interest rate could go back down or it could go up. Now, the way I like to look at it is, if you're finding an interest rate that you can live with, a home that the price is right, your monthly payment is correct, it's a property that you and your family can afford and still have a healthy living and ownership balance, then take advantage of it. Because I can tell you, looking back at the history of interest rates, guys, at one point we were in the 12 to 16% interest. Now, granted, homes were way cheaper, but there's nothing that says that it couldn't get back to that. So you're always better off taking advantage of a buyer's market, making a strong offer on a house that maybe has been sitting for 20, 30 days, come in under asking, or ask for buy down points going towards your interest rate, and get a win-win situation going that route. And if interest rates decide to drop back to COVID times, then refinance your property. Then you've definitely won, because I can tell you going the other way, if home prices go up 5%, that's a big chunk of change. Okay, now let's say that interest rate goes to 6 or 7%. So I've got a chart that I'm going to put it right up here so that y'all can take a look at it. But essentially, let's say $500,000. Principal interest, you're 4.5%. Roughly around $3,000 a month. Now, if it goes to 6%, it's going to take you down to almost $500 more. So what does that do for you long term? Well, you're spending a lot more money on that interest. You're spending a lot more by waiting to see what happens with this market. If you want a home, if you can afford a home, you want to get pre-qualified, give me a shout. Hit me up on here. My email's in my profile. My telephone's there. Feel free to reach out, because I'd love to sit down, go over your options with you, and let's find out what you can do, where you want to be, and let's put you in that home. Hope y'all have a great day, and we'll see y'all soon.